Hello. Welcome to our next chapter, that is your income computation and disclosure standard, that is ICDS. So it is applicable to SSCs. It is applicable to SSCs covered under section 44AB, that is to those SSCs to whom tax audit is applicable. And it is applicable to AMT. However, it is not applicable for calculation of MAN, that is your minimum alternate taxation. That is not it is not applicable to those, but it is allowed to AMT, that is your alternate minimum tax. Okay, so your first is construction revenue and cost to be measured using percentage of completion method, which we also called as POCM. So construction revenue and cost to be measured using the percentage. So cost and revenue both will have to be calculated. You will have to multiply it with how much percentage has been completed. This you will get by a this figure you get by a certifier. Penalty due to delay in completion not to be subtracted from revenue. Any penalty that you are paying, that will not be subtracted from your revenue. Revenue from service transaction also is your POCM, that is for service transaction. Also it has to be done on basis of percentage of completion method, your revenue part. And recognize revenue on completion of service if duration is less than or equal to 90 days. That means if your service is less than or equal to 90 days, you will recognize the revenue only on completion. However, if it is more than 90 days, then you will use this POCM method. Next is revaluation of assets is not allowed under income tax. Revaluation of assets is not allowed. You can do that in your books, but not under income tax. When assets are exchanged, that means if I gave an asset to someone and I received an asset in exchange, in such a case, cost of asset received, to identify that, boss, what do I show the cost of acquisition of this asset? My cost of acquisition of this asset will be fair market value of asset received. So cost of asset received is the fair market value of asset received. That is the fair market value of that asset that I am receiving. That will become my cost of the asset. Next is expenses before production for sale should be capitalized. For example, any expenses that you did before it was ready for production for sale, all of those expenses will be capitalized. For example, any test run, experimental production that you did, all of those expenses will be capitalized. It will not be charged to P&L. You will not get a deduction straight. It will be capitalized. You will get it in the form of depreciation. Next, any gain loss on actual settlement of foreign currency. Gain loss on actual settlement of foreign currency. You will be allowed on both monetary and non-monetary items. Both will be allowed. However, exchange difference on balance sheet date, that is your closing rate, that will only be allowed on your monetary items, and on your non-monetary items that will not be allowed. Okay, so only for monetary items it will be allowed. That is your exchange difference on balance sheet date, because this is not your actual difference. Okay. Next is your closing inventory should be valued at lower of cost or net realizable value. Okay, so lower of cost or NRV, that is what my closing inventory will be valued. However, if my company or my firm is being diluted, that means it is being shut off, it is being closed, then in such a case it will be valued at NRV. My closing inventory will now be valued at my net realizable value, because boss, I have to sell this, no? Therefore, it will be valued at my NRV. And securities value will be category wise, that is equity shares, preference share, debentures, etc. It will be bifurcated into categories, and then we will do cost or NRV, whichever is lower. Next is government grants, whether revenue or capital will be treated as income even if the conditions are not satisfied. That is the conditions. If any conditions they gave us, even if we were not able to satisfy those conditions, it will still be treated. It will still be treated as income even if the conditions were not satisfied, unless the grant is received for a depreciable asset. So in such a case, it will be reduced from the cost of the asset. So even if the conditions are not satisfied, this will be treated as an income. And however, if the grant has been received for a depreciable asset, in such a case, we will be subtracting it from the depreciable assets cost itself. Okay, so the grant amount we will be subtracting. So you will get reduced depreciation by this. Next is your borrowing cost capitalization. So if you remember, in India, you can suspend it. That means you can pause it for some time. If there is any permanent stoppage of work, in such a case, you can pause the capitalization. But over here under income tax, you cannot stop, you cannot suspend the borrowing cost capitalization. Once it has started, it will continue. So any specific borrowing, that means if you took a loan for a specific expense, for a specific purpose, then in such a case, from the date of borrowing to the date till the asset is put to use, that interest will be capitalized. That means from the date when you have borrowed the funds, from that date only it will start ticking, and till the time asset is put to use, that amount will be capitalized. However, if you've taken a general borrowing, that means you've taken a borrowing and now after taking the borrowing, you are deciding where to put this. So in such a case, this is the general borrowing. So it is from the date of funds you. That means, for example, even though you took the loan, say for example, on 1st April 2022, even though you took the loan on that day, but you actually used the funds on 1st July 2022. In such a case, your capitalization will start from this date if it is a general borrowing, and it will start from 1st April 22 if it is a specific borrowing. Okay, so under specific borrowing, what you have to remember, even if we use the funds later, that does not matter. The date when you took this loan, that is the date that will matter. Okay, so date of borrowing till assets put to use is for specific borrowing, and for general borrowing it is the dates that funds used mine till the date the asset is put to use, that is when your capitalization will start and stop. And your last part of the chapter, that is contingent asset, can be recognized but not contingent liability. Under your NDS, both contingent asset and contingent liability can be recognized, but under ICDS that does not allow. Why do they allow? They allow contingent asset. Contingent asset is an income, therefore they will, since they will get taxed on this, they have allowed this part. But contingent liability will eat from your profits, therefore this they have not allowed. Therefore, contingent liability is not allowed, but contingent asset is allowed. And with this, we are done with this chapter, and I'll see you in the next one. That is your tonnage taxation.